And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, everybody. Welcome to the Market Forecast. Wednesday, October the 20th. We survived Black Monday yesterday. It would have been Black Tuesday, October the 19th, the day of the crash in 1987. I'm glad we did not do that. As always, this morning, we're going to attempt to find good context in these markets, find some good risk management, and of course, always exercise patience. I'm rested and ready for this morning. Looking forward to seeing the opportunities that we can find here this morning. As far as economic numbers are concerned, nothing very vital to the economy coming out, unless you consider crude oil vital to the economy. The 9:30 EIA petroleum status report is due out. We had a little bit of a surprise boost from the API last night. Not looking for that much of a boost in the EIA, but we will have to wait and see. There are, however, several talking Feds today, and the Fed's Beige Book comes out today, which means it's 2 weeks from the next FOMC meeting, which, with everything going on with the Fed members trading, looks like it might be an interesting one. As far as other things going on in Washington, lawmakers are continuing to try and agree on some sort of a spending plan. The Dems' efforts to spend $3.5 trillion, which is an astronomical amount of money, hopefully being trimmed closer to something a little bit more reasonable. Netflix beats expectations forecast yesterday, but is trading lower this morning. Today, as far as earnings are concerned, the majors this morning already out: Verizon and Nestle. We have Tesla after the close today, and perhaps even IBM. Crude prices consolidate after that API number showed an increase in inventories here in the U.S. of about 3.3 million barrels. The EIA is looking for approximately a 1.8 million barrel boost. Any boost, I think, would be welcome. Speaking of welcome, you're all welcome to join our group coaching session. Here is the link so that you can register at 1 o'clock today, right when the Beige Book comes out. We'll be starting our second group coaching for the week. We're starting to do it on Monday at 1 o'clock as well as Wednesday at 1 o'clock. We've got some good questions emailed in already, and I look forward to any other challenging questions that you have as far as trading is concerned. I always like to mention nobody knows everything. No, I don't. But there's a lot we're going to learn together in these sessions. So looking forward to seeing all of you there. Make sure that you hit the lucky like button. Make sure you share, comment, questions, feedback, heckling, and subscribing are always welcome. And looking a little look at the VIX, the dollar index, and the yield on the 10-year this morning. VIX down a little bit, 1561, as these equities continue to grind higher. VIX grinds lower. Dollar index pretty much steady, 93.77, and the yield on the 10-year up a little bit this morning, 1.62%. Got to say good morning to everybody as usual. Seeing maybe some congratulations are in order here. Good morning, Spencer. First in the room. You win the prize this morning. Frederico, Janus, Theo. Good morning, Ricardo. George, Felix, Brian, Alfred, Robert, Jason, Tyson Wilson, Ednelson, good morning. Good morning, Laura. Vince, good morning, my friend. George, Zerain, Michael, Frederico, Rob T, Alan Blackwell, Power Insider Trading. Yes, right. Ryan Williamson, good morning. Ophelia, good afternoon. Happy to see you again today as well. Mikel, do you ever hit a profit target and then shut it down for the day? Do you even look at your P&L, or do you have it hidden or showing as ticks? Well, I usually leave it up. I guess I'm a little bit steely when it comes to not focusing on P&L. And there are days when I'll just say, you know what, this is a good day. I'm gonna call it for the day. A lot of folks are going to argue with that. They're going to say, well, if you do that, you may leave a lot of money on the table. I find that if I put up a trading day that I haven't achieved in a long time or ever, anytime you reach your best trading day ever, just keep it. Why not, right? But I tend to try and kind of monitor for opportunities as the day goes on, even in that case. And I will always make sure that I end the day a plus player once I get to a certain level. If I'm up $1,000, maybe I'll risk 400 of that. Maybe I'll risk 40% of that, trying to add to those wins. But at some point, I'm going to say, all right, that's going to be it. I want to make sure that I'm a player in the blue or the green at that point. So, but anytime I put up a day that I haven't seen in quite a while, whatever that means for you, if it's $1,000, that's the best day you've had in a while. Nothing wrong with keeping it. Again, take that next trade if you want to. You never know. That next trade could add to that. If the next trade's a loss, maybe then you walk away. If the next trade's a win, that buys you another trade. That trade's also a winner, that buys you another trade. There's lots of ways to kind of think about that and how to handle that. But once you get to a certain point, make sure that you're only risking a percentage of your realized daily profits. You want to make sure you're a plus player. The real trick to this game is risk management and being here tomorrow. Very important. All right. Jerry's awake. Good morning. Past the combine. Svatoslav, good morning, and good morning to everyone, of course. Jerry is awake past the combine. Nice job, Jerry is awake. I'm hoping I'm awake today as well. Mikhail is saying congratulations. Well done, Jerry. Very nice. Patrick, Jason, Leo, do you see this gap? Do you see this gap up on VX? I'm not sure if you're talking about VIX. Spencer, good morning. Leo, Ricardo Nelson Benitez, good morning. Andrew Flores, good morning. Congrats, Jerry. Let's all combine trades like Jerry today. Yes, of course. We're looking for everybody's success and looking very much forward to it. Stefan C., good morning. Frederico. It's a bit weird news of insider trading by Powell since he basically sold half of the way up on the market moves since March of 2020 bottom. Does Beige Book move the market? JB. Not really. Not really. It's probably not going to be very impactful. It's just something to note that is due out. A lot of traders kind of focus on the numbers when something comes out, when there's an economic release. I'm more interested in when it is and how the market responds to it. But JB, it's not expected to be a major market mover, not at all. It's really the kind of first look at what the Fed members are going to be looking at and discussing in 2 weeks at the FOMC meeting. So there's no policy changes, just a brief look at what they're going to be looking at. Yeah, if Powell's selling, does that mean that the top is in, right? Right? All right. Lots more congrats to Jerry for succeeding in the combine. Again, looking forward to that continued success. We're going to jump into the charts now. As always, just going left to right, starting with the daily in crude. No particular order. Everybody knows the rules. One bite each. Here is the daily in crude oil. You got a 2-day balance beginning here. I'm going to make this big so we can all see it. So we've got kind of a measured move up to our weekly kickoff high, which is 84.70. You can see that black line up there. The market really one-time framing in large part on the daily chart for quite some time. The structure is strong. Of course, there are weaknesses that are always left behind. We've got weak open interest. Yesterday, we lost 23,000 in open interest, and a major part of that was the December contract getting closer to expiration. I'm sorry, the November contract getting closer to expiration. Volume, of course, is coming into the December because it's now the new front month. It's a little bit difficult still to read volume and open interest due to the rollover, which, by the way, natural gas is currently in. So we're looking at an inside extended trading hour range so far this morning. We're not quite open in regular trading hours here just yet. What are we looking at here on the 30-minute chart? So we can see overnight high, overnight low, inside yesterday's regular trading hour session, which really was the extremes of yesterday's trade. We've got the market holding some overnight shorts here. Settlement was 82.44. Put that on your charts. Most of our overnight activity has been pushing below that price. Of course, we know we're waiting for the EIA at 9:30 today, so opening in range and perhaps even coming back into value after the open gives us an early opportunity for a potential overnight inventory adjustment back towards settlement. And then after that, I think we're going to probably do a lot of waiting until after 9:30. I'm going to let any dust settle, any knee-jerking take care of itself and look for opportunities after that. Early in the session today, I'm really looking at, are we going to reject value from yesterday and not adjust inventory towards settlement? Or if we do, come back into and accept value from yesterday, value low right here, 81.67. Then we'll look for, if we do accept, then we look for the inventory adjustment back to where it started, in essence, back to settlement. So try and stay patient in crude oil this morning. Got a couple of minutes before the open. Maybe we'll go back and look and see if the opening range is the high or low of the session. Moving on now to the E-mini S&Ps. Boy, it sure has been a directional move this week. I was not buying into this because the volume is so slow. The open interest is not really bringing in a whole lot of new business to this market, but it doesn't change the fact that we trade what we see, and price has been moving higher all week long. We've got weekly high in play, weekly kickoff high in play here this morning. That's 45.20. We put a late spike up towards it yesterday. We're working on where we are going to open in relation to that late spike this morning. Again, the volume yesterday, not tremendous. Even the New York Stock Exchange had about 5% fewer volume than the previous day. So the market isn't necessarily bringing in volume or open interest. It's just continuing its grind higher. It's just what these equities tend to do. When there's no bad news, they just grinds higher. And, there's still plenty of uncertainties out there, but traders have short memories. When equities want to grind higher, they are going to grind higher. Here's the 30-minute chart. All right. Here we've got our range from yesterday. We've got a late spike that happened basically into the close and after the close. So what this late spike represents is a potential change in the perception of value. Here we've got the beginning of a late spike and then the continuation that occurred all the way until 3:30 yesterday. Still going to be somewhat impactful. Volume was still pretty decent. Price was moving higher and has not yet had time to accept that higher price. So if we open in or above the late spike, it's marking acceptance of higher pricing, and we can look for prices to continue to go up and truly test weekly kickoff high, which is right here, and perhaps a breakout to the upside, perhaps maybe a move to the all-time high. Anything is possible. It just depends. I mean, this weekly kickoff high is an area where I will be monitoring to see if we have longer, stronger participants coming into the marketplace, whether they're selling into new shorts or getting out of longs or buying into new longs or getting out of shorts. One way or the other, I'm looking for opportunity here at this inflection level. So again, we open above the spike. This becomes my next area for an opportunity in either direction. We open below the late spike, value high from yesterday, the range of high from yesterday, and our overnight high, which is basically one tick from the high of the late spike, become more important levels for me. If we open back in range and value, that's an indication of perhaps rejection of higher pricing. Maybe we'll see this market come back down to earth just a little bit. So to accept or reject on many levels is very important for us today. We reject the late spike, we move lower. We accept value, we move lower. We reject value and accept price in the late spike, we move higher. We accept price above weekly kickoff, we move higher. We don't, we reject this level, we can turn this thing all the way back around. It's anybody's game as to what's going to happen. It's one of the most aggravating things as well as one of the most rewarding things about trading is being able to take all of this information, crunch it down into a strategy, and then have that strategy for that day play out. It is never easy. We never really know exactly what is going to happen. Now to the Nasdaq, the daily chart. Better volume and open interest on the Nasdaq. Okay, we've broken out of weekly kickoff level where these markets, the S&P and the Nasdaq, are similar. They are a little bit different. We've seen the market. We've seen a not great volume yesterday. However, at least we did add some open interest. So some new business came in on this push to the upside. Again, we're testing the previous day's high. We're kind of stuck inside that range, at least for now. Above this weekly kickoff level, I mean, it's a different market state. We're still working on getting into that market state in the S&P. The Nasdaq has presented stronger. So, and we do have, a lot of tech companies coming out with earnings. So if those earnings are good, we're going to see some more movement here in the Nasdaq. My question is, we've had a very strong move to the upside. We're starting to see the 9-session whole moving average above price. That can be an indication of slowing of momentum. But again, when these equities want to go, they're just going to go. It doesn't really matter what volume or anything says. They just tend to grind to the upside. Take a look at the 30-minute chart here. Okay. So we have a late spike as well in the Nasdaq. We can see that right here. It looks like, if we were to be opening right now, we'd be opening in the late spike. That would tell me perhaps possible acceptance of higher pricing, and I'll look to buy weakness in this market today. It makes sense. The market's been moving higher. Why wouldn't we want to try and buy weakness until proven wrong? So if we do open with the inside this late gap, it may mean a little bit more of an important opportunity for us to respond early this morning. Watch the opening range. If we open with a gap and we can't close that gap, we're opening in the late spike, acceptance of higher price. Watch the opening range. If the opening range is the low, it may be a worthwhile opportunity for us to take that long and see this market continue to move to the upside. Late spike rules. We open in or above the late spike. It's acceptance of higher price. Try and buy weaknesses. It can always be rejected. All of this is probability. There's nothing that's 100% going to work or not to work. But as far as the rules, if we open in the late spike and we can't close the gap, there's another rule there. When we open in the late spike, we look to buy weakness for continuation to the upside, especially if we can't close the gap. We open below the late spike, back in range and value. That gives us, I think, the opportunity to remain patient and look for opportunities as the day goes on. Let's jump back here and take a quick look at crude oil. It looks like we had a pretty substantial opening range here. Opening range here looks to have moved lower, now trading back above the opening range. So the opening range, rather substantial, maybe 20 to 21 ticks. That's pretty big for the crude oil. Here's the 30 just to give us a look for where we are. Okay, we've got some pretty substantial shorts in this market. We've taken the opening range, looked lower, come back above the opening range. This is where the shorts might start to get a little bit nervous. If we continue to see day time frame traders selling into this, our overnight shorts are going to hold on. If we don't see continuation of selling coming into this market, at some point our overnight shorts might start to get a little bit nervous and bring price back inside value, or perhaps even all the way back to settlement. It's all about acceptance. Do we accept back in value, or do we reject value? I know if I'm short up here and I'm holding on to this, I'm going to be on a hair trigger if anything tells me that I need to get out of this to protect some of the profits. I know I'll be there. Spencer, that's a really, really good question. I would say most of the time it invalidates that actionable info, unless it's a very particular type of context or situation. Watch, Spencer, for when one of those situations come up. But sometimes, when we're at an extreme, Spencer, and we move below that extreme on an opening range trade, and it looks like the opening range is going to stay the high of the session, but we reject that level and take out the high of the opening range, that's a valuable piece of information. It's when we're up against longer time frame trades or traders, if that makes sense. All right, gold this morning, positive for the session so far, but we're kind of in a volatile range-bound short time area of control. Big up, big down, just seems to be repairing all of these emotional days, back and forth, back and forth. Volume and open interest has been very spotty. It's up one day, down the next. Up one day, down the next. Up one day, down the next. That's what the open interest looks like as well. Tells me that there's not a lot of longer time frame interest in this market, at least not at this point. Look where we've been. We've been just kind of range bound in the longer time frame. We're right in the middle of it. It makes sense that we're looking at shorter time frame participants here. So volume and open interest have been very indecisive, as it has been showing on the chart. 30-minute chart, I should say. Okay, we have some overnight longs in this market. Settlement was 1770.50. Put that on your charts. The market has opened. It is continuing to push to the upside. But this is all again going to be short time frame traders, just looking for We're looking to make a little bit of money. I mean, the market opened largely in range and in value. It's pushed higher. It's working to spend some time, build some volume above value from yesterday. If we show that value is moving higher, we may see this market continue this move to the upside. If we reject up here, which, look at the way this market has been kind of bouncing back and forth. Volatile, big trade, big range days, followed by a couple of small days, a volatile day, range bound, another volatile day. Where are we today? Well, we've got plenty of things to look at on either side of the market for us to kind of focus on for opportunities. Right now, I'm watching to see if we can continue to pay our overnight longs, because that may indicate some potential longer time frame buyers bringing us closer to a test of weekly kickoff high. It's a lot of overnight longs here. If we can't continue to move higher, there will be an opposite reaction at some point today. To the euro. All right. Daily chart. We have a reversal pattern. We have a head and shoulders pattern. We've got a measured move from an acceptance above the neckline, which I'm basing off of weekly kickoff high. If we accept above weekly kickoff high, the measured move takes us relatively close to this swing high. I'm really liking that. We need to find acceptance above weekly kickoff high. Acceptance in time, volume, participation, momentum. This market is certainly on my radar because of the current situation that it is in. So if we can accept above weekly kickoff high, we may see an acceleration of new buyers coming into this market and completing the measured move off of our head and shoulders, which again puts us up there. Yesterday, on an attempt to break out above that weekly kickoff high, we lost 2,200 in open interest. However, there was a little bit of an increase in volume, which makes me a little bit more encouraging, because off the lows here, as we continue to put in higher ranges, we're starting to put in higher volumes. So if we had a little bit of maybe a long liquidation above weekly kickoff high yesterday, today is a new day and a new situation. I'm going to be kind of hip on this market today, because I think there is some potential decent opportunity here. Here's the overnight the other day. Here's yesterday's high. Here's the overnight high again. The market keeps trying to test up to this area, but keeps being rejected. We've now opened below range and value. We are now back inside value, showing signs of acceptance of value. I would say it's a pretty good probability that we're going to trade to the other extreme of value at some point in the session. If we take out the overnight high, we've got a gap that we've left unfilled here, and we've got plenty of visuals above the market with which to go and repair. We don't have that much down below. We've got a couple of naked points of control. We've got our bull flag here, which this would be a supportive level if we got there. But more importantly, I'm focusing on this weekly kickoff level here. If we can accept above that, I think that there's some pretty decent upside technical potential for the euro. Everything depends, as far as currencies are concerned, on the dollar. Tenure. Daily. Test of weekly kickoff low in the overnight. That was also a measured move. We tested it in the overnight. But at least we have tested the measured move and weekly kickoff low. Check that off your list. Volume and open interest continue to really overall slow at these levels. We lost 4,200 in open interest yesterday. So as we get closer to this important level, participation is being cut off. longer time frame traders are not responding, at least not yet. Here's the 30-minute. Here we have overnight low to weekly kickoff low, basically opening back in range and back in value, which says, maybe we have the opportunity to be a little bit patient. Overnight inventory got a little bit short, is no longer part of the equation. I'm going to stay patient here and just look for another opportunity at perhaps our overnight high could be an interesting spot. Certainly our overnight low close to the weekly kickoff low would also be interesting. Yesterday, I just want to step back for 1 second and look at gold. Yesterday we had a coach's playbook which was about ranges and breakouts. So this morning, as price continued to come back up to the high of value from yesterday, there was an overnight high that occurred right here. There was a daytime high that had occurred right here. And at the time, this was our high right here for our overnight session here. So there were 3 attempts at this level, which left kind of not very strong highs up here that said, if we break out of this, this might actually bring us a decent opportunity. And if we did take that trade, we're looking at 1786.10 to 89.60. So we're only really looking at, 30 or so ticks. But still, when it broke out above those highs, there was a really good push, and it never came back down to it, of course, until now. So if we took that breakout trade above there, it did provide a decent opportunity. But again, in short time frame, getting closer to the upper extreme of balance, we're going to keep our expectations very reasonable. Just dawned on me that I wanted to talk about that when we were looking at that gold chart, because breakouts are so difficult, so challenging. I've been burned by so many times by them. Nasdaq. Nat gas. We noticed yesterday, or have been noticing, that we've got a bit of head and shoulders. This is a reversal pattern. We have a bearish engulfing pattern off the high here. It almost seems strange to be coming into winter and knowing what's going on in Europe with nat gas and energy over there, to think that this market technically is set up for a down move. It's hard to say sell strength, but again, below weekly kickoff low, that's the thing to do. We've got our head and shoulders pattern. I'm calling our neckline right here. So if we were to take the neckline to measure to the top of the head and then go from the neckline down, that has us all the way back down to this level here, down around $4.10, $4.11, to really kind of finish what this pattern is telling us. Volume and open interest was low yesterday, lower volume. We lost 4,000 in open interest. Yeah, it did need a healthy pullback, and that's really what I'm looking at this as. The 30-minute chart. Settlement, $5.08, 8.8. In range, in value, no real overnight inventory with which to speak of. The market really just kind of looking to rotate in value today. We do have a couple of previous points of control that we've checked yesterday. Still got a little bit of visual information down here, and then again the move down to the completion of the head and shoulders. I'm going to stay patient though. I'm in range. I'm in value. I would prefer to sell against strength here, but if we get a breakout to the downside, I may have to withstand another one of those nasty breakouts that are so difficult and sometimes very costly. So there's a couple of ideas. As we go through our trading day, it's always working on thinking about context and trying to hypothesize context correctly, hypothesize market states correctly, and then use a strategy that suits those market states once they begin to prove to be correct. It's never easy. We never know the outcome. And as much as I would love to just say, hey, this is going to happen and I'm going to get on this, we can't do that. We can't do that. We never really know. I stood next to guys in the trading pit for years that just knew that the market was going to go higher that day and would not give up on it, and saw them put together some really bad, sometimes even tragic days because of that. I've been watching the S&Ps, and I have not been all that pleased with how the volume and the open interest have been kind of treating this move to the upside. It seemed hollow to me. So, early this week, I had an idea that I was going to be short and I was going to be right. But, I have enough experience to say I'm not seeing what I thought I would be seeing. So let's lay back a little bit here and, just soak up some information. Whatever we think doesn't matter. The market's going to do what it's going to do. And it's telling us one way or another through the little signs that it gives us what it's doing. If we can find those even half the time and get some good asymmetric opportunities where we can limit the risk and expand the profits, we're going to be in good shape. So let's take our deep breath. Grateful, humble, patient, creative in my trading today. Looking forward to everybody's success. Looking forward to seeing everybody at 1 o'clock for group coaching. If you want to come, love to have you there. Love to see if I can answer your questions. And other than that, have a great trading day. I know Dan will be with us for the market recap later on. Always look forward to seeing Dan. And other than that, get out there and profit. Trade well today. I'm going to step down to the pit here in a minute. I'll see you there. Have a great day.